Jai Hind students. So today we would be talking about the functions of commercial bank. Banks perform so many functions. So out of these we can categorize the bank's function into two categories. Category number one is basic or primary function of bank, and the second one is agency function, or we may call it secondary function also, or we can say the general utility services in nature. Okay, so now let us discuss it one by one. The functions of banking we would be discussing. The first one is acceptance of deposit. The bank accepts the deposit from public, we all know it. So the people deposit their money as per their convenience and capability in different accounts. So now let us discuss that what are those different accounts in which people can deposit their money. So the first function of acceptance of deposit. So through this function, acceptance of deposit of bank, we would be discussing the different types of accounts also. So now let us talk about the different types of bank accounts. As per your syllabus, the different types of bank accounts which we have to discuss is one, saving account. See, this account is to encourage the small savings. The bank pays interest on this account which is less than that of like fixed deposit account, recurring deposit. So money deposited in this account is known as demand liability of the bank. And you must know it that the bank offers a variety of saving account based on the type of depositor. Features of the product like salary account, zero balance account, and there are regular saving accounts like saving accounts for children, for senior citizen, for women, for housewives. uh, Then there are institutional saving account also, then family savings account, and so many more. As I said that there are zero balance saving account also, like salary account, which is offered by the employer to their employees. And this saving account can help you to open a demat account also, and you can do the trading in shares and securities too. Then the second one is current account. This account is basically for traders, businessmen, and entrepreneurs who need to make and receive payments more than other people. So there is no limit that you can withdraw only twice or thrice like saving account in a week. So here you have unlimited transactions you can do in current account. Or you can understand in this way. In this account, a depositor can deposit money any number of time and can withdraw it as and when they need it. So in this account, generally business class or businessman deposit the money. So the bank does not pay any interest on these deposit. If the total amount deposited is less than the minimum amount required, then the bank can even charge some service charges. This is like fine that if you reduce the deposit into this account. There is no limit on the number of transactions per day here, and it allows overdraft facility also. Now understand what is this overdraft facility. Suppose you have in your bank account only 50,000 rupees as deposit, and you have to make a payment of 60,000 rupees, and you issued a check to someone of rupees 60,000, right? So if it is a saving bank account or the current account without overdraft facility, usually bank will dishonor your check, isn't it? But in this case of current account, if you have given the overdraft facility, then bank will make the payment of rupees 60,000 also. And this extra 10,000 which have been paid by the bank would be treated as loan given to you, and bank will charge interest on it, correct? And there is a minimum limit also, that this much balance you need to maintain your account. Then now let us talk about the fixed deposit account. See, if you have extra money and you are not going to use it in a near future, you know that for at least 3 years I don't need it, or 3 months I don't need it. So you can park your this extra fund into bank account and you can earn high rate of interest on it comparison to saving account. So this account means the fixed deposit account, which we call FD. You must have heard this term, FD. It allows you to earn a fixed rate of interest for keeping a certain sum of money locked in for a given time. You can have a fixed deposit starting from the 7 days to 10 years. And the interest rate also will vary. It will vary bank to bank even. Usually you can't withdraw money from an FD before it matures. But nowadays if you withdraw it premature, then bank allows you to do so, but in that case they give you less interest. Now the fourth category is recurring deposit account, or we call it RD. This also has a fixed tenure, but like FD you deposit a fixed sum at once, but here you will be investing the fixed sum on regular basis, like you may deposit it every month or once in a quarter. The rate of interest is higher than the saving account but lesser than the fixed deposit. So here you are not depositing lump sum amount, but you are investing it in a smaller amount and regularly on a fixed period. This you cannot do that. This month you have deposited 500, next month you will deposit 1000. It is not like that. Here also if you draw it premature, then you have to pay some fine, or there would be loss of interest rate. See, this multiple option deposit account is a beautiful combination of saving account and fixed deposit. So what happens in this account? If you have a multiple option deposit account, then you will fix a limit that if it goes beyond that limit, then the extra amount would be transferred automatically into fixed deposit. Let us understand this with an example. Suppose you have fixed a limit of 50,000. So 50,000 is your limit, suppose. Now suppose you have deposited 70,000 rupees, or say 1 lakh rupees into your account. So extra amount of rupees, this 50,000 means the 20,000 or the 50,000, whatever is the extra amount, whatever is the amount which is more than 50,000 would be automatically transferred to fixed deposit. So in this case what will happen? You would be earning more interest, because in saving account you get less interest, in fixed deposit you get more. So the account holder has double benefit from this amount. What are those two benefits? A, he will earn more interest. Second, it will lower the risk of dishonoring a check. Suppose you have issued someone a check of rupees more than 50,000. In your saving bank account it is 50,000 only, but suppose you have issued a check of rupees 60,000. 10,000 you have in your fixed deposit, but then also bank will honor it. So your check would not be dishonored. Okay, so under the first heading, acceptance of deposit, we have discussed the different types of bank account which people can deposit money into it. Now the second basic or the primary function of the bank is lending of funds. So how bank lends the fund, how bank provides advances and loans to people. Now let us discuss it. Then the another main function of a bank is to advance loans to people. A bank receives money through deposit, and a certain part of this money is transferred to the cash reserve, and the balance is used by the bank for advancing loans or giving loans. These banks generally provide loans for productive work, and while doing so they demand a proper security also. So the amount of loan is generally lower than the value of security, correct? So the bank advances loans or provides the loan through different ways. So now let us discuss these ways one by one. First one is term loan. These loans are provided by the bank to their customer for a fixed period to purchase, say, a machinery, plant, truck, scooter, or home. You know? And the borrowers repay these loans in monthly or quarterly, or you can say half yearly, annually installments. Second one is bank overdraft. I think I have explained it already. Now let us understand in this way. Suppose the customer who maintains a current account with the bank takes permission from the bank to withdraw more amount than deposited in his account. So the extra money withdrawn is called overdraft. Correct? So now let us understand this with an example. So this facility is available to only trustworthy customer, remember it, and for a very short period also. So if we take the example, suppose an individual's account is having rupees 10,000 as deposited and the bank has allowed him to issue a check up to rupees 12,000. So then 2,000 is what? This is the overdraft facility. Correct? Now comes the cash credit. Under this, a borrower is allowed to withdraw a specific amount on the basis of a specific security. So the borrower withdraws the money and deposits it within the specific limit only. The bank charges interest only on the money withdrawn. Then the another way is discounting of bills of exchange. This is another method of providing advances by the bank. Under this, a bank gives money to its customer on the security of a bill of exchange before the expiry of the bill in case a customer needs it. After charging discount for the remaining period of the bill, the bank makes immediate payment against the bill. So a bank discounts only the trade bill. Remember it. The bank charges interest from them as per the market rate and realizes its money on the completion of the period of the bills of exchange. After discussing the primary function of the bank, now let us talk about the secondary function or agency function or service functions of the bank. Third function of the bank is check facility. See, under this facility, the banks render a very important service to their customers by collecting their checks drawn on other banks. So the check is the most developed credit instrument, as we all know, and this is a way of withdrawing the deposit also. So it's a very unique feature and functions of bank that bank allows their customer to withdraw the money using the check or making the payment. So it is the most convenient and very inexpensive medium of exchange. Now there are two types of checks mainly. One is bearer check, another is cross check. It's an example of bearer check. Though here a name is written, like Ankit Sharma name is written here and also written here or bearer. So anyone who is bearing this check, who is having this check, he can go to bank and can get this 37,000 rupees which is written here. So correct. So if it is suppose you have given a check to Mr. Ankit Sharma and he lost it, he dropped it somewhere. Any person who will receive it can go to bank and can get the payment of this much amount. Right? Understand the meaning of the cross check. Cross checks which are to be deposited only in the pay's account. Like here, if you just draw these two lines here in the left corner of the check, as it had been shown here in the image. Now you have specified that only Mr. Ankit Sharma should be paid this amount. Correct? So now what Ankit Sharma will do, he will deposit this check into his account and the money would be transferred in his account. Now he can withdraw from his account. So cross check is more safe, or it is safer than the bearer check, because even if it is lost, no one can take the money. Only Ankit Sharma would be the receiver of this money. The fourth function of bank is also very important. Suppose you want to send money from one place to another place. How bank can help you into that? Bank provide a facility of fund transfer from one place to another. And this transfer of fund is administered by using bank drafts, pay order or mail transfer, and on a very nominal commission bank provide these facilities. So what happens, the bank issues a draft for the amount on its own branches at other places and other banks at those places. So the payee can present these draft on the drawee bank at his place and collect the amount. Or in simple word you can understand, suppose you want to send 50,000 rupees to Mr. X who is in Delhi. So here in your account you will deposit 50,000 rupees, bank will give you a bank draft, and this bank draft you will send to Mr. X and he will deposit this draft into his account and will get the money credited in his account. It is that simple. Now the question is that the same can be done through the check also. Suppose if I have to send the amount to Mr. X who is in Delhi, so I can issue a check in his name and can courier it like bank draft. So he will receive the check and will deposit it into the bank and he will get the money. My question is, suppose you are Mr. X, then what will you prefer? You will prefer a payment through check or you will prefer a payment through bank draft? I mean to ask you that what is the difference of making payment through bank draft or check? So please write this question's answer in the comment box. Then the fifth service of the bank or fifth function of the bank is allied services. In addition to all these functions which we have already discussed, bank also provide allied services like bill payments, locker facilities. You must have heard about the locker facility. You must be knowing it. If you have some valuable like jewelry or some very important documents, so all these you can keep it safely into bank's locker. Bank charges for these services to the customers. Then there are underwriting services. Bank also can perform the services like buying and selling of shares, securities, debentures on instructions of customers. And they can provide the other personal services like payment of insurance premium, collection of dividend. Even nowadays bank has started the services of paying the school fees, college fees also. So these all will come in the allied services. So these are the 5 major functions of bank, in which these 2 we keep in the category of the primary function and these 3 we keep in the category of secondary function, or this is the main function or this is the basic function, main function, primary function, and these are secondary functions or the agency function also we call it. Correct? Now let us talk about the e-banking. My dear student, as we know that the growth of internet and e-commerce is dramatically changing everyday life, isn't it? With the use of internet, e-commerce, the world has been transformed into a digital global village. Now the world has become a global village. So the latest wave in information technology is internet banking. It's a part of virtual banking and another delivery channel for customers. In simple language, we can say that the internet banking means any user with a PC, means the personal computer, and a browser can get connected to the bank's website to perform any of the virtual banking function, which actually you can go to bank and can take those services. All those services you can avail sitting at home or in your office. So basically there is no human operator to respond to the needs of the customers. The bank has a centralized database that is web enabled, and all the services that the bank has permitted on the internet are displayed on a menu, and any service can be selected and further interaction is dictated by the nature of service. As you can see here, this is the website of ICICI Bank, and if you see there, you can perform almost all the activities for which you need to go to the bank, isn't it? You can apply for credit card, debit card, everything is available. You can apply online for even saving account, home loan, personal loan. You can take the insurance, car loan, and all the facilities. Almost everything is available here on our online. So a customer can manage his savings. He can check his accounts balance. He can apply for loans as you have seen there. Can pay the bill over the internet using a personal computer. You can even use the EBanking, mobile telephone or handheld computer. Now what are the types of e-banking? What are those services which are being offered through e-banking? Is ATM, automated teller machine, point of sales, EDI, electronic data interchange, and credit cards, electronic or digital cash, then electronic fund transfer, EFT. Now we will be talking it one by one. The first one is automated teller machine. You please remember this word. Sometimes students make a mistake while they have been asked to write the full form of ATM. So basically it is an electronic banking outlet that allows customer to complete the basic transaction. Like you can withdraw the money. Now there are ATM where you can even deposit the money, right? You can use your debit card, credit card. Now even you can get your passbook updated also. Then the second one is point of sales. You must have seen this type of gazette at several shopping malls, shopping point. So you can make the payment using your card here. Nowadays you need not to insert the card and you need not to put the pin also, but you just tap and payment will be made. Then electronic data interchange. Basically this is a concept of business electronically communicating information, which was earlier traditionally communicated on paper. Then comes the credit card. You must be knowing about it. There is a limit already decided by the bank and you can use this credit card to make the payment. Then digital cash. All such type of e-wallet like Paytm, PhonePe, Google Pay, all these will come into this category. Then electronic fund transfer. It's a system of transferring money from one bank account directly to another without any paper money being exchanged. There are two ways in which EFT can be done. One is NEFT, another is RTGS. Now here I would like to introduce you the third one also. This is IMPS. This is called Immediate Payment Service. Now what is these three things? I have shown it here. Now how these three things differ with each other, let us understand it. In NEFT, the minimum transfer value is ₹1. Even ₹1 you can transfer. But in RTGS, you cannot use RTGS if the amount is less than 2 lakh. In IMPS again you can send even ₹1. Maximum transfer value depends on the customer segment, that what type of customer you are. This will be decided by the bank which is giving you this facility. In RTGS there is no upper limit. In IMPS there is a limit and it is ₹2 lakh. How in NEFT the settlement happens? It happens into batches. In RTGS it happens one-on-one settlement. As the full form of this RTGS is real-time gross settlement. So it happens in real time. Same way IMPS also one-on-one settlement happens. The speed of settlement is 2 hours. Again it is subject to cutoff timing and batches. It depends again on the bank. RTGS it happens immediately. IMPS also happen immediately. And it is 24/7 available. Please remember it. NEFT is also 24/7 available. RTGS depends on the bank. Some bank allows it on the working days only, and the time also differs. But one more difference you can have it here, that you can do NEFT RTGS online and offline both. So you can go to bank and can deposit the money there, and they will RTGS it on your behalf wherever you want to send it. IMPS happens only through online. Then the next thing which we have to discuss is the benefits of e-banking to customers. As it has been shown in your book, statement have been written in your book, but when it will be asked in the examination, please use the heading and write it in 30 to 40 words minimum. So the first benefit is, for a customer, it facilitates digital payments. So this you may use as a heading. And then you can write that how it promotes transparency in the financial statement. Second heading, you can make 24 hours 365 days, 24 into 7 facility. This facility is available. E-banking facility can be used from any place. So whether you are traveling, you are in house, you are in office, or you are in other city, you can use it from anywhere. So you can write it in a heading that it can be used from any place. Then it brings a financial discipline, because everything is in your control. Everything, you have the record of all your transactions always available. Not like the traditional ways, when the people used to go to bank to get the passbook printed or passbook entry done by the staff of the bank. Then only they will come to know that okay, these are the financial transactions which I have made. But here it's easily available, just on in your hand. And we have a greater customer satisfaction using the e-banking, because it is offering the unlimited access to the bank. Now you can use your bank from anywhere, and whatever the service you want to use, you can. So these are the benefits of e-banking to a consumer, the customer. Then there are some benefits of e-banking to the banks also. What are those? A, it provides competitive advantage to the bank, because nowadays you have to compete with the private bank. The public sector bank also has to compete with the private bank. So what type of facilities they are providing, you also need to upgrade yourself. So we keep on listening this type of information that now this bank has allowed this also, now this bank has allowed this services also. So they also need to keep themselves updated. Then it provides unlimited network. Now the banking is not limited to their number of branches only. So any PC or any mobile connected to the bank has become now the bank. Like you must have heard nowadays that many of the banks are providing the facilities that you can withdraw the money from any shop. So all the shops also has been converted into the branches of the bank. And then this is the most important benefit to a bank, that their load has been reduced. Load on branches is reduced. So these are the three headings which you can write for benefits of e-banking for a bank.